Gold is on the move again in 2025, and yeah, it's not hype, it's macro, it's monetary, and honestly it's becoming more urgent by the day. In this video, we'll break down the real forces driving gold's price higher this year. From central bank actions and global instability, to inflation persistence and, a growing distrust in fiat currencies. Let's start with what might be the biggest factor: central bank demand. Since 2022, central banks, especially in China, India, Russia, and other emerging markets, have been accumulating gold at record levels. Why? Because they want to reduce reliance on the US dollar. Gold is liquid, non-political, and doesn't come with sanctions. In 2025, this trend has only accelerated, with China now reporting its 18th consecutive month of gold reserve increases. This massive, non-speculative buying puts a real floor under the gold price. Next, there's rising geopolitical uncertainty. Conflicts in Ukraine, tensions over Taiwan, instability in the Middle East, it's all making investors nervous. In uncertain times, gold becomes more than just a commodity. It becomes insurance. As military budgets rise and political alliances shift, gold is being used not just by individuals, but by governments, as a hedge against global disruption. Now, inflation is officially easing in many parts of the world, but the reality is different. In 2025, everyday costs, from rent to energy to groceries, are still climbing. Central banks may be pausing rate hikes, but real yields remain negative in many places. Meanwhile, currencies like the yen and euro have lost purchasing power. When fiat money loses value, gold gains. It's a centuries-old rule. Total global debt has passed $320 trillion, and it's still climbing. Governments are now spending more to pay interest than to fund health or infrastructure. With debt-to-GDP ratios spiraling, investors are increasingly turning to gold as a defensive move. Because if debt becomes unpayable, the answer is always to print. And that's bullish for gold. 2025 is also a year where digital currencies are making headlines. Several countries are piloting or rolling out central bank digital currencies or CBDCs. But here's the catch. With CBDCs comes surveillance and potential control over how you spend your money. That has sparked a growing movement into gold and silver, not just as a hedge but as a form of financial privacy and autonomy. Finally, from a technical and psychological standpoint, gold breaking past key resistance levels, like $2,200 and $2,400, has invited new speculative flows. More investors, including institutions, are allocating a percentage of their portfolios to gold for the first time in years. It's not just a crisis asset, it's becoming a mainstream one again. So what's next? If these trends continue, gold could be setting up for a generational move. It's not just about price, it's about what gold represents in a world that's shifting fast. If you're watching this, you're ahead of the curve. Follow for more fast finance content as this story unfolds.